Hey everybody, welcome in. Things are going from bad to worse. Big thank you to everybody in the chat as well. Big thank you, Glenn Johnson. Appreciate it. Appreciate everybody for being here. It is a capitulation event. So let's go into exactly what this is all about. I've been asked as well for an update on Celsius. I'm going to cover that too, but it's all related. This is all about cascading liquidations. And let's jump in. As usual, this is sponsored by Strong Caffeinated Beverages. And that's it. So we talk about history being broken, not financial advice, it's edutainment. And the story today, well, let's just talk about the story. This is a flush out of leverage. Every single step we go down, something else breaks. Consider 100-story building. All the floor levels are people's liquidation levels, and they're hitting faster and faster and faster. This is a monstrous flush out of leverage. Sorry about the rude picture of a toilet, but that's basically what it is. Now, a visual of what this looks like, not as dramatic as actually what's happening right now, is as Bitcoin or Ethereum or whatever people have staked as assets, and a lot of it is actually on the institutional side too. As they go down in value, they need to sell assets to cover, which causes a spiral. And this causes the price of the assets to decrease, which causes more assets to be sold. Real simple cascading liquidations, talking about it for a week now, and it's ugly. Now, in terms of the outlook on the horizon, I covered this in the macro update, I think it was Thursday. We are in a recession. I'll prove that to you in a minute. There is no growth in Q2. Consumer confidence is in the toilet as well. Mortgage rates have doubled in 6 months. Mortgage payments are up 50% plus for many families. Single family homes starts have crunched to a halt. Mortgage demand has crashed. Building permits crashed. Credit card debt is up because things are so expensive. Inflation, we saw that print a week ago. Nasty. Technology stocks are in bear market, and there's no consumption left. Everybody bought all the stuff they wanted to buy in the year 2000. So let's talk about the GDP. The Atlanta Fed came out with a report that GDP is now at zero. Again, not in line with the rest, but we've been talking about a recession now for a while. It's definitely a recession. Now the government has begun to realize it's a recession. So let's look at some of the market indicators. Big thank you as well to Sunjay for the inspiration for this one. This is the Nasdaq versus the 10-year yield since the beginning of the year. The orange line is the 10-year yield, went up from about 1.6% to now about 3.2%. And the Nasdaq tanked from about 16,000 to about 10,700. That is basically, whoops, I just hit the mic. I shouldn't use my hands too much, but it's basically a cross, and we've seen a couple of those lately too. Hope this thing is still working. Let's go. Now, Bitcoin dropped out of the top 10 assets. You can see now we're down below the NVIDIA, Visa, United Health, Meta, Johnson & Johnson, etc., etc. Silver and gold are still up there, and other tech stocks too. But you'll see this was a radical change. We'll talk about the size of the market cap, but now Bitcoin has become a very, very small asset, under 600 million as we speak. 600 billion, sorry. Now let's talk about the dominance. Bitcoin dominance has tanked to 41.97%, which, it's been right now, it's approaching the floor. I would say 39% of the floor and 50% of the roof. We came quickly down over the 48% level very fast in the space of 5 or 6 days. You can see here, this is the price of everything valued in Bitcoin. You can see that actually Ethereum is falling faster than Bitcoin at 0.05 Bitcoin. BNB is down too, but a couple of things are holding up well. Forget the stable coins, USDC and USDT. You'll see how big they have become on the map. It's been a while since I showed this. You got Tron is up, which is amazing. It's not depegging. Cardano, XRP, Solana, Polkadot, Near, Avalanche, VeChain. They are all holding relatively well compared to Bitcoin. And the reason for that is I believe, and I'll talk about it in a minute, as I believe these things are not having cascading liquidations. So we'll dig into that more. Now, in addition, this is from PlanB. Bitcoin RSI is at an all-time low. It has smashed the records as Bitcoin is over 70% from all-time highs. The 200-week average, 200-week moving average is also smashed. You can see here the greenish line is heat map-ish of where we are, and we are way, way below that. In fact, when I put this chart together, we were at 18,835. Now, as we speak, we are approaching 18,000 fast, because 18,200, because these liquidations are not stopping. So is there any glimmer of hope? Let's keep on going. Another visual from PlanB for the importance of the 200-week moving average over history. You can see this has always held up as really, really good support, but never before in the history of Bitcoin have we had so much leverage in the system. This dot painted, which represents the color blue, represents the distance from all-time high over 70%. It is smashed to the 200-week moving average. Another visual why this is historic for us right now. Now let's talk about the liquidations. Here you can see that liquidations are not that high on exchanges. You know, Bitfinex, FTX, etc. It's only 140 million over the last 24 hours. 69 million of ETH, 5 million of Solana, 2 million of Cardano. It's a chain link. It's really very nothing. So something else is going on here. And this is why we believe the liquidations are happening elsewhere, not on exchanges. So the fear and greed is also at 6, a new record low. I do not recall a time where I've ever seen fear and greed at the level of 6 before. So it is a terrifying time to be out there. Now, I've been asked about a Celsius update. I am not the face of Celsius, if anybody is misunderstanding. Celsius has 1.7 million customers. I had a referral link I mentioned 3 times. It brought in 0.0002% of all those customers, if even that. So just to put things in perspective, but I will give you a Celsius update as to what I know. And I know a lot of people are worried. I have Bitcoin, I have Ethereum, and I have Solana on Celsius right now. I didn't take anything off. Now, there was a full-on attack on Celsius. This is true. Celsius are managing risk. I watch them adding collateral to prevent liquidation, especially on staked ETH and wrapped Bitcoin. That's what stETH and WBTC stand for. Celsius are radio silent, and they have to be. Lawyers' orders, hence the AMA yesterday was very brief at 13 seconds, basically cancelled. Celsius have lots of collateral on chain that's easily verifiable. Please go out there and check out the Celsius wallets. You'll see that. Celsius is talking to Citibank about some plans forward. Celsius also hired attorneys, Aiken, Gumstrauss, Hauer, and Feld, for financial guidance. And Celsius is mulling probably, I don't know, the Nexo offer over. That does expire very shortly, I think. It expires on Monday. I'm not sure exactly the day. I think it's the 20th. And per on-chain data, all is not lost, not by any stretch. Even the biggest detractors of Celsius say there's a good chance people will get 80%, maybe as bad as 50%. But the last point here is the most important. That's what we're going to dig into right now. Liquidation risk remains out there. So let's look at what that actually looks like. First of all, staked ETH over ETH pool is disjointed. You can see the staked ETH is the blue line going up and to the right, nearly at 80%, and the Ethereum percentage is down about 20%. The ideal ratio is a perfect balance between both. So that imbalance will cause a depegging beyond probably what we're already at. Let me check the current staked ETH story as we speak, because it is very important to watch that carefully. Staked ETH is at 0.935, so it's hanging tight. Actually, here's the current chart. I forgot to put it in there. This is the staked ETH activity. Since the beginning of the year, you can see it was holding the peg, but it was very volatile. It did go up to 1.07 and fell down as low as 0.93 back in January. And we are at 0.935 right now. We're a little bit up off the bottom, but look at the volume activity here. So it has been traded very heavily. And again, staked ETH is not like other assets. There will not be a death spiral. It's just about a waiting game. So ARBs will come in and pull that ARB opportunity out very quickly. I think if it gets anywhere near the 0.9 level, we're safe. But we'll talk more about that. this is what is important for everybody to know, is Celsius's risk increases as the staked ETH falls. So if you have a staked ETH ratio of going to say 0.7, and that combined with the fact that the Ethereum price is falling, that can bring about increased risk for Celsius. Remember that, very important. Now, the liquidation price right now for Bitcoin on their WBTC Vault, as you can see here, let me read some of these numbers for anybody who is not looking at the actual screen, but they have been adding to this wallet, building up their collateral, and they have moved the liquidation price from about 14,800 down to 13,600. And the total debt is about 224 million, so it's substantial. And the collateral is about 23,963 Bitcoin. Again, it is not all by any stretch of all the bags, but it is an exposure for Celsius if there is liquidation in this area. Now, another news as well, MakerDAO, they did vote to reduce the Celsius exposure, and that is in the event that Celsius becomes insolvent and gets a margin call, it would be forced to dump the staked ETH, causing a depeg further from ETH. This in turn would make MakerDAO's $100 million in DAO loans to Celsius irrecoverable. So in order for them to protect themselves, their lending position, and further prevent borrowing of DAI using staked ETH collateral, MakerDAO voted temporarily to pause the D3M. So, and something similar is happening with Aave, I think, as well right now. Aave are looking to freeze the staked ETH that it uses collateral on the platform, according to a recent proposal. I think it's P3 or 8.3 or something like that. Anyway, so this means the silver lining here is maybe the cascading liquidations are soon to stop. But think of that number, about 13,500 for Bitcoin liquidation price. Let's pull it up one more time. 13,600 is an important number to look at. The question is, how low can we go? So let's talk about, maybe there might be a glimmer of hope or two. Let's cover them right now real quick. First of all, Adam Back, who is an OG in the space, knows exactly what's up. He does have a perma-bull case for Bitcoin going to 100K this year. It might seem unbelievable, but remember, this asset can move very fast, and he believes a US physical Bitcoin ETF, which is the catalyst I've been talking about for a while, could bring about a nice whipsaw. And remember, there's not a lot of supply out there. And in fact, I was just looking at the wallets, and the wallets of 100,000 plus Bitcoin have actually gone up of late. A second sign is Il Capo of Crypto. He spoke about the new confluence for Bitcoin is at 16 to 17,000. Let me see. Somebody is messaging me here. I don't know if it's for anything right now. Now, this, according to Il Capo, who has been very good at estimating things lately, he believes this is going to be an important bottom for Bitcoin. Remember, we are 1,200 from, let me pull up the exact price right now because this is all unfolding as we speak. 18.3. We're $1,300 from that 17,000 level. So pretty close. Now, a little bit of perspective. This is from Wicked Smart Bitcoin. You'll see here, he believes we will spend more time, more or less time between 10,000 and 100,000. It's not going to be over 855 days so far. But if you look at the other layers, $100 to $1,000, we were there for 1,339 days. And 1,110 days between 1,000 and 10,000. So it's funny just to break out kind of where we are and how fast this asset class has grown. And again, it's just perspective. The question is, when are we going to get to 100,000? I don't know. But it looks like a pretty sure thing based on history as we go forward. In addition, this was, got to thank Sunjay for the inspiration for this one. He sent me over, a potential savings vehicle, and let's call this DCA'ing into fiat for the next 10 years. Imagine you start with 100,000 today, and you add 10,000 every year to your bag. So that means over the next 10 years, you will invest 200,000. Now, if the annual interest rate is 1%, it's currently 0, but if it is 1% in the bank, call it 2 or 3% or whatever, that's included here. Number of years is 10. The tax rate, remember, when you get interest on your deposit, you get taxed on that. And that's typically, in the US state and federal tax, about 35% for some, higher for others, etc. And the rate of inflation, take the current 8.5%, 8.6%, whatever, because we know that's really a fake number. It's always double that in terms of reality. The point here is you would invest 200,000 over 10 years, 100,000 lump sum today. Your total nominal future value is 215,000. Your after-tax future value is 209,000. And your future value after taxes and inflation is 92,000. So whatever you invest in over the next 10 years, fiat is not a good idea. And that's kind of a little segue and kind of, I know it's a really dark time right now with the markets the way they are and everything else, but we will come out the other side. That is for certain. And in fact, Jim Stack agrees. The good news is that this will ultimately lead to one of the best buying opportunities in decades, he writes just yesterday. But for now, patience is paramount. Wait for things to turn around and get ready to pull that trigger, because that trigger is approaching us really, really quickly. So with that, everybody, I'd like to say happy Saturday, but hang tough, everybody. A year from now, hopefully this will all be a distant memory. But in the meantime, just need to get to the other side, okay? Thanks.